I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. Welcome back to the show, Ted.
It's great to be back, Jim.
What could turn BC's red-hot real estate market into something different? Well, at least in the greater Vancouver area, people are now facing a 15% tax on top of their purchase price if they're not Canadian. Ted, is this a useful thing?
Well, the provincial government had a number of options they could have looked at, anything from an outright ban on non-residential, non-local buying. They didn't necessarily have to restrict it to foreign buying, or they, could have sort of kept going with their supply side focus, and they chose sort of, I wouldn't call it the middle ground, but they certainly lurched quite heavily towards intervening in the market with a tax. And taxes usually do have an impact, and they usually have a negative impact in terms of volume of transactions. So if you're looking to keep the real estate transaction wheel going, no, it was not a useful thing. But if you're looking to slow down the real estate market and have an impact, at least on a short-term basis, it probably will be quite effective. The question is, how much impact will it have, and for how long? Because while foreign buyers will now be taking second thoughts about moving money into the Vancouver real estate market, local speculators and speculators from other parts of Canada have no such impediment. So long as the Bank of Canada keeps its ridiculously low emergency interest rates in place, which is absolutely no justification for, we'll continue to be vulnerable to Vancouver real estate hyperinflation. Just in the short term, this tax will likely have an impact. The question is how much, and if it's sufficiently big, if it sufficiently shocks the psychology of the market, well, then it could set the market back on its heels. I think the base case is it has a short-term impact until, like as I said, local speculators come back in and take advantage of Stephen Polo's ultra-low emergency lending rates.
And also 15%. If somebody was already willing to pay $1 million more than the listed price, what's another 15%?
Well, you can say that, but I think it does require any actor to make a rational decision. And if a lot of speculators were hoping to maybe make say a $500,000 to $1 million flip, there is risk involved. I mean, I think one of the nice things about what the provincial government was that it reminded people there is risk in the real estate market. It's not like you're going in and buying treasury bills. And so whether investors or speculators are able to shrug off this 15% and say, well, nothing like that's ever going to happen again. But there's other forces at work as well, Jim, and that is the federal government is finally, getting its, well, I won't say getting its act together, but it's finally making some moves on the tax front, and one can only hope on the money laundering front. We talked about this a couple of months ago. You asked me, should the provincial government bring in a foreign sales tax? And I said, well, why don't they start, not they, but the government start with enforcing existing laws, such as money laundering laws, and enforcing the tax code. Well, I guess the reason why they didn't wait for that is because Ottawa is very slow, and they're just getting around to it now. And Justin Trudeau, to his credit, devoted some money to not just collecting data, but to hiring CRA auditors and investigators, which you need to do to get down, to get into the details of some of these transactions. And this isn't like checking your mother's bus passes to see if she's making sure she's not over claiming on her tax form. These are very complicated transactions. So the federal government seems to be showing some interest now in the Vancouver market. With the 15% tax, I think they'll even be more interested now in Toronto market. So there's more forces at work. The risk is going up, and so I think it's not just 15%. There's the other 2% that they have to pay. So it's really more like 17%. So it starts to bite. And it has had an impact to some extent. You can debate how much in Singapore and Hong Kong. They did a 10% tax. It didn't seem to matter. They bumped it up to, I believe it's 15 or 18, and it seems to have had an impact. Now, there are other forces at play as well, including a slowing global economy, which may have had something to do with it. But, to have a meaningful bite, I think we're in the ballpark.
Well, Hong Kong sales are down 15%, and value has dropped probably that much since last September, and I didn't know that they had put in a tax like this. So obviously, yes, there is a point even for these people willing to invest millions and millions.
Well, and plus right now they can go to Toronto. I mean, there's a lot of international presence in Toronto. It's a cosmopolitan city. It's got there's connections with all over the world in terms of the people in the community. Why would you pay the 15% in Vancouver if you're a speculator when you don't have to pay it in Toronto? Now, if you're coming here to move and you're coming here to live and participate in the community, well, that's fine. Then I think everyone would welcome that. It's just when things get out of control and you've got hot money flowing in from China and other places, and you've got hot money in Canada as well. And I don't think we should forget that there's also hot Canadian money here. That's a different story. And until the Bank of Canada raises rates, tightens financial conditions, and there may be some evidence of that, of financial conditions tightening a little bit in Canada right now, but we'll have to see. You're going to continue to have an open, speculative, culture in the Canadian real estate markets. Now, it'll be different in different pockets, and with this foreign tax, it just might make Vancouver a little less attractive to speculators, and I'm not surprised that there have been calls for Toronto to implement the same type of measure. If that happens, I think you really have to look at Canadian-focused bank stocks to see how vulnerable they could be. When I mean Canadian-focused, I mean the ones that have not diversified their products beyond the Canadian border. So there's, ones that are, I would say, more widely diversified than others are names like TD and Bank of Nova Scotia, and to a lesser extent, BMO. But there's a number of other banks that have not diversified their portfolios as broadly as those banks. And, it would be interesting to see if Toronto does bring in this type of tax, how markets react. Right now, they don't seem to be too concerned about it, but we will see.
What about the right of Vancouver now to have a tax on vacant houses?
Well, we'll all be interested to see the details, and I think until you see the details and how it works, I think the jury's out.
And, I was just thinking too, Right now, Vancouver has no rule on how long you can do renovations. I mean, there's a house that's famous on 41st Avenue that's been under, quote, renovation, I would say, for 20 years. They go in, they throw a little dirt around in the yard and go away for 2 years.
There you go. Already, you've exposed some of the challenges with this type of initiative, but let's see. I give Mayor Gregor Robertson credit for sort of, I think, taking the initiative here. It's ironic that it was the City of Vancouver that really, I think, got the ball rolling with their basically sort of basic frustration, saying we're going to impose this home tax, this vacant home tax. And it's ironic because really the City of Vancouver had very little to do with the problem per se. Like this speculative frenzy that we've seen in the market. Yes, you can argue about the zoning, their zoning and how they've kind of allowed zoning to take off, but that's not what drove the speculation. And it was the federal government that, through a number of policies, including low interest rates, but there are other policies that they implemented. They drove this situation, and they're the last to really act. So it's ironic. First you had the City of Vancouver proposing action. Now you've seen the province, and finally we may see something from the federal government. Finally.
Well, a lot of people, too, if you're listening from outside the Metro Vancouver area, it's 2.5 million people, the greater Vancouver area. But the City of Vancouver is one of 22 municipalities that make up that area. So really, yes, it's the biggest voice. And, of course, it probably has the biggest influence. But really, it's one city out of 22 that has had, led the way on this. I haven't heard much talk from other mayors about it.
That's correct. So, I disagree with the Vancouver mayor on just about every issue, except I do give him credit for this. He bit the bullet, and I don't think it was an easy move for him, and I think he really broke the logjam and got things moving. So when I say I give him credit, it's unfortunate that we have to resort to these types of policies. And I say it's unfortunate because the reason why we have to do this is because of the irresponsibility of global central banks causing this global wave of liquidity between the Bank of Canada and the People's Bank of China and the Fed. We've just got these emergency monetary policies in place that are causing these distortions. And basically what they do is they kick the problem down the chain to governments like the City of Vancouver, who are the least equipped to deal with it. I mean, the City of Vancouver does not have a huge bureaucracy dedicated to dealing with the fallout from lousy monetary policy, right? I mean, they have a bureaucracy, it's just not focused on that, right? So to expect the City of Vancouver to deal with the problem, which is basically what Stephen Polo's, has done by totally, I would argue, shirking all responsibility with the damage that his policy has been doing in Vancouver and in other areas. And, and we can talk about Calgary. I mean, yes, Calgary's in a recession right now. Well, that's partly due to his policy of loosening monetary policy too fast. As soon as he got into office, he started to talk down the loonie, which was ridiculous when the oil price was trading at $100. So we've had just one disaster after another coming out of the Bank of Canada. And, unfortunately, I don't see that trend changing, but hope springs eternal. But again, at least the federal government, the elected officials now seem to be taking action and helping to clean up the Bank of Canada's mess.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ted Dixon. Ted, the Canadian stock market, since that dip at the start of the year, has performed very well, better actually than the U.S. markets. Is that going to continue?
Well, we have a very critical few weeks coming up again. It seems I probably say that quite a bit in terms of what policymakers are up to, especially these central banks and governments that are actually, in a position to do something. And by that I mean Japan. Shinzo Abe just had his party do very well in recent elections, and he's about to unveil a stimulus package in the first week of August. And that could help boost Canadian markets if it's big enough, because it will be all focused, the word is, are mostly focused on infrastructure spending, both in Japan and abroad. So that's interesting. However, Jim, there is a risk that the markets could be disappointed with this package if it's not as big as people expected. And unfortunately for Mr. Abe, market expectations now have gotten to the point where people are expecting something like $100 billion worth. Well, that's going to be a hard number to deliver. And if it's even half that, you could, with $50 billion, which isn't a bad number, you could see markets sell off. The other risk facing Canadian markets and global markets is not only, of course, central bank mistakes. We have the Bank of Japan meeting later this week, and everybody's going to be watching what they do. But you've also got Italian banks and European banks, and Europe sometimes has can do kind of uncomfortable provide uncomfortable situations for markets in the middle of August when everyone's on holiday in Europe, and we'll have to see if the Italian banks can kind of get through the summer here without any major hiccups. But there are some signs of stress in the banking system. Basically, offshore money rates called LIBOR, which is the London Interbank Offer Rate for U.S. dollars, has been creeping up. But now part of that is explained by some money market reforms that are going to happen in the fall in the U.S., but I wonder if it's all about that. So we'll have to keep an eye on where markets go. From here, insiders, which is what we track at Inc. Research, they've been taking money off the table both in Canada and the United States. Our U.S. indicator is heading back towards 52-week lows, which as the market moves up is not a surprise, but it's getting back to these levels where now you've got the selling versus the buying is almost 3-to-1 in favor of the selling. So you've got a very kind of cautious approach in the United States amongst insiders, and in Canada too. We were under 100% now on our indicator. 100% means there's many companies with insider buying as selling. Now that's below 100%, and in Canada, so that's the first time we've seen that in quite a while. So that suggests that insiders are taking money off the table this summer, both in the, primarily in the mining area where they've had some good runs, basic material area, and in some of the other areas. But we've seen some profit taking in the financials, and the energy sector is also kind of still looking okay on a long-term basis, but on a short-term basis, insiders aren't committing a lot of more money to that space right now.
Oil prices have been going down for about the past week. Is that an indicator that we're going to see another major dip?
Well, that's another big risk, and it's something we wrote about to our clients just last week. And you do have to watch the oil price. If it dips below 40, I think you could see another sell-off. Right now, markets are taking it in stride. They're taking a lot of things in stride. There's been some better than expected U.S. economic data, which seems to be giving a lot of confidence to market, those people who are actually in the market right now. But it could just be a snapback from some of the weakness we saw earlier in the year. It's too early to say that it's sustainable, and I would be very surprised if the Federal Reserve does anything on the hawkish side when it releases its statement on Wednesday, for two reasons. One, I think they know that they need to see some more momentum build in the economy to make sure it's not stalling out. And secondly, having a tightening of financial conditions between now and November would benefit one American in particular, and that person's name is Donald Trump, and I'm not so sure Janet Yellen is in any hurry to facilitate that.
Ted, thank you so much for chatting with us.
Talk to you soon.
You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.